Welcome to Finance Deep Dive. Today, we're pulling back the curtain on a billion-dollar mystery. What is Warren Buffett's latest big bet? Recently released filings just gave us a rare peek inside his playbook, and they reveal a calculated shift that gives us some major clues about where he thinks the economy is heading.
For months, the entire market was buzzing. The big question on everyone's mind was, what is Buffett secretly buying? Everyone thought he'd poured billions into one single mystery company. But when the secret finally came out, it wasn't what anyone expected. The truth? Well, it was way more interesting.
So, to really get what happened next, you have to understand the sheer scale we're dealing with here. This isn't just any investor. This is Berkshire Hathaway, and they were sitting on an absolute mountain of cash. A war chest of, get this, $344 billion, just patiently waiting for the right moment. And then that moment came. In the second quarter of 2025, the filings dropped and they showed Berkshire finally put some of that cash to work. Nearly $4 billion started flowing into the market, aimed at some very specific areas. So the big question is, where did that money actually go?
Okay, let's get into the nitty-gritty. We're going to break down exactly what Berkshire bought, what they sold, and piece together the master strategy behind it all. Because this wasn't just a shopping spree, this was a calculated major portfolio shift.
So take a look at this. This table really shows the rebalancing in action. And you can see a clear pattern, right? On one side, you have brand new multi-million-dollar positions in places like healthcare and home building. And on the other side, they're trimming their stakes in some of their biggest winners, like Apple and Bank of America. The best way to think about this is like a master gardener. Seriously. He's not just letting everything grow wild. He's looking at his biggest, most successful trees, like Apple, and deciding to prune them back a bit, harvest some profits. And he's using that room to plant new seeds in other parts of the garden that are looking undervalued right now. And the biggest new seed they planted? A nearly $1.6 billion bet on the healthcare giant UnitedHealth. And trust me, the story behind this one investment is a perfect case study in the Buffett philosophy. Now, check this out. Berkshire made its move after the stock got absolutely hammered, plunging nearly 50% over the last year. So why the massive drop? Well, the market was basically panicking over short-term stuff, a change in CEO, and some chatter about new regulations. This move is textbook contrarian investing. It's the absolute core of Buffett's success. It's really all about having the courage to start buying when everyone else is stampeding for the exits. So by looking past all that panic, Berkshire's team saw the real picture, a fantastic business that was basically on sale. Its price-to-earnings ratio, a key way to measure value, had fallen to its lowest point in a decade. And this was all happening while the company was still growing revenues at a super healthy 13%. And this move just perfectly illustrates his famous philosophy, right? The market's fear created this rare opportunity to execute it perfectly. They got to buy a truly wonderful company at what turned out to be a very, very fair price. But here's the thing, the UnitedHealth bet wasn't made in a vacuum. Nope, it was actually one key piece of a much larger puzzle, a strategic shift that kind of reveals Berkshire's view on the entire U.S. economy. Just look at where else the money went. Alongside healthcare, Berkshire dove into homebuilders, steelmakers, and added even more to its giant position in Chevron. You see the pattern here? These aren't flashy tech stocks. These are the foundational pillars, the nuts and bolts of the real economy. Take the investments in homebuilders, for example. They made these bets despite today's high interest rates, which are supposed to slow the market down. This just screams confidence that the long-term, massive shortage of housing in the U.S. is going to completely outweigh these short-term problems. So here's the crucial point. Berkshire deliberately invested in these cyclical and, let's be honest, kind of boring industries. And they did this while basically sitting out the huge tech rally of 2025 that's been grabbing all the headlines. They're zigging while the rest of the market is zagging. When you zoom out, this all boils down to a few powerful, totally timeless principles. These are the core ideas driving these billion-dollar decisions, and they are absolutely lessons that any of us can learn from for our own portfolios. Okay, so here's the playbook, a four-part mindset. First, and this is so crucial, is to buy businesses, not just tickers on a screen. Think like a business owner, just like the team did when they saw UnitedHealth's strong revenue growth. Second, be greedy when others are fearful. That's what buying a stock after a 47% plunge is all about, right? You're turning market panic into your opportunity. Third, find companies with a durable competitive advantage, an economic moat, as he calls it. And finally, number 4, let patience be your most profitable asset.
Remember that $344 billion cash pile? They waited. Patience is a weapon.
Honestly, if you take away just one thing today, let it be this. This single quote perfectly wraps up the entire strategy behind these moves. It's really the core of value investing. It's not about complex spreadsheets, it's about emotional discipline.
So as you think about your own financial journey, the real question is, which of these powerful principles can you start putting into practice today? Maybe it's just being a little more patient, or maybe it's doing deeper research into the businesses behind the stocks. Whichever it is, remember, the mindset is what matters most.